So we have May, June 2024, paper one, and the information relates to DBN Limited. The company sells household products. The financial year ended 29 February 2024. So we already know we're gonna start the financial year, right? So it's starting now on the 1st of March. On the 1st of March 2023. Then we have April, May, June, July, August, September, October, November, December, January, February. So it ends on the 29th of February 2024. Okay, let's continue reading. I think I wrote it too far. I think I wrote this too far. Let me try and move it closer. Yeah, this is perfect. This is the right spot. Yeah, just put it here. Okay. Continuing, we look at the information here. As we said, we are looking at director's fees. So we can see that the pre-adjustment amount for director's fees is actually okay, wait, let's wait a minute. People are still joining, so let me accept them quickly. Okay. So here's our item we are looking at, director's fees, right? So the pre-adjustment amount with regards to director's fees, here it is, 852,000 rands, 800. And then below here we have our adjustments. And then obviously the adjustment that speaks about director's fees would be this one, right? Okay, so let's read the adjustment. They say the company had one director, Jenny, at the beginning of the financial year. Jenny had been paid in advance for 2 months. A second director, Frank, was appointed on 1 December 2023. His monthly fee is 20% lower than that of Jenny. And then Frank received the fees due to him. So before we start, what is this adjustment testing? What is this adjustment testing us on before we can, start working out the question? Any answers, guys? Any answers? Any answers? What is the adjustment testing us on? Feel free to answer. Prepaid. I see prepaid. What do you mean prepaid? Yes, matching principle. We see matching principle. Exactly. That's matching principle, right? And then the sentence that gives it off, that gives off the clue that we are actually being tested on the matching principle is this one here where they say Jenny had been paid in advance for 2 months. Yeah, that's where it gives it off because Jenny had been paid in advance for 2 months. So let's try and break it down. We have Jenny. How many months has she been paid? How many months has Jenny been paid? Just write in the chat. Let's mute our mics, guys. How many months has she been paid? 14 months, ne? It's 14 months because she's been paid the 12 months and then 2 months in advance, right? Plus the 2 months in advance. So meaning what's this? The March and April for 2024. So here's Jenny, and she has been paid for 14 months. Okay. And then they say a second director, Frank, was appointed on 1 December 2023. How many months has Frank been paid? Let's look at, let's write Frank. How many months has he been paid? How many months has Frank been paid? 3 months. I see 3 months. Let's see. Let's count. Ne? So he's been appointed from January, 1 December, I mean. So obviously that means we count the month of December. So we have December, January, February. That's just 3 months, correct? So Frank has only been paid 3 months, right? And then they say his monthly fee is 20% lower than that of Jenny. Frank received the fees due to him. When they say this, they mean we just paid him, you know, properly. Like we didn't pay him less 1 month. We don't owe him anything. He doesn't owe us. Whatever that he worked for, we paid him, which is just these 3 months. Nothing in advance, nothing that we owe him. It's just the 3 months that he has worked for, he's received the income, right? For those 3 months. Okay. So now we have this where they say the monthly fee for Frank is 20% lower than that of Jenny. So how we are going to look at this, or how we are going to maneuver around this, we will assume that Jenny was receiving 100% payment, 100% fees, or yeah, salary. Okay, director's fees. So that would mean that Frank is actually getting 100% less 20%, right? 20% less than that of Jenny, which means Frank is actually receiving now 80%. If Jenny is receiving 100%, then that means Frank is receiving 20%, which is not 20%, man, 80%, which is 20% less than than that of Jenny. Does that make sense? I hope that makes sense. Before we move forward, does that make sense? Give me a thumbs up if that makes sense, how we broke it down. Give me a thumbs up if that makes sense, guys. Before we continue. Okay. 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 I think I see a question. Can you please explain again? Okay, so we are trying to break down the payments now. They said Frank is receiving 80%, 20% less than that of Jenny in this adjustment here. His monthly fee is 20% lower than that of Jenny. So how we work around that is that we assume that Jenny is receiving 100%. And if Jenny is receiving 100%, that would mean Frank is receiving 80%, which is, 20% lower than 100%, right? It's just straightforward, simple, since they gave us a percentage. I hope that makes sense, no? I hope that's clear. So, okay, now we already saw that they are trying to test the matching principle, right? They're testing the matching principle, which is for Jenny. Jenny had been paid 2 months in advance. So, meaning Jenny had been paid for the month of March and April 2024, right? So what are we trying to do here? We have to figure out how much is these 2 months that we paid to Jenny, and we must subtract them from our financial statements, right? We need to subtract the 2 months. So here's how we are going to, approach this. So we have Jenny here who has been paid for 14 months, right? So within these 14 months, she received a payment of 100% per month. That's what we were, assuming. Remember that we don't know how much the payment is in rent amounts. That's what we are trying to figure out. So we are using what we have been given, which was percentages. So Jenny, now her payment was 100% per month. For how many months? 14 months. So we will say 14 multiplied by 100. That's for Jenny. Meaning that she received a salary of 100% for 14 months. And then we are going to add it with the salary for Frank. Frank, on the other hand, received the salary of 80% for 3 months. So we are still going to do the same thing. We will say 3 multiplied by 80, right? And then what does that give us? Can you write the answers in the chat? When you just punch these in your calculator, what answer do we actually get? $1,640. Okay. We are getting 1,640, right? Thank you, guys. So this 1,640 is in the form of percentages, no? It's in the form of a percentage. So the 1,640 is in the form of a percentage because it's for both directors for the months that they have been paid throughout our financial year. However, remember the pre-adjustment amount which we were given, it was 852,800. So the 1,640 is equivalent to the 852,800 because it's for both directors for the financial year, right? Okay. So to get now, we are now getting closer to finding out how much Jenny was receiving on a monthly basis. And remember, her monthly salary was 100%. Right? So we are going to use the what I want over what I have method. So we'll say 852, that's what we've been given. That's the only random amount we have. So we use what we have, right? 852, 800 multiplied by what I want goes on the top. Remember, I want the salary for Jenny. She's getting 100%. So multiplied by 100 over what I have. The 852 relates to the 1,640, so divided by 1,640. What do I get? Let's see answers in the chat, guys. Answers in the chat, answers in the chat. Okay. I see 52,000 rands. So Jenny was receiving a monthly salary. I see it's 728,000. This is too much, no? That's too much, guys. Be careful on how you use your calculator. Okay. So Jenny on a monthly basis was getting actually how much? 52,000 rands, right? So we can't really talk about Frank because Frank, there's nothing, we don't really have an interest in Frank because his matters are sorted. Ne? He's been paid what was due to him. So we don't have problems with Frank. We don't really need to calculate how much Frank was receiving. The only problem is with Jenny, simply because she had 2 extra months. Ne? So this 52 is for each month. So to get for the 2 months, we must multiply the 52,000 by 2, right? 52,000 rands multiplied by 2 And already you can see it will give you 104,000 rands, right? So basically, Jenny was paid 104,000 rands in advance with regards to her salary for 2 months, right? So it shows you how much money directors are making. They're getting paid well, eh? So the 2 months extra is actually 52,000 rands. Okay. So now that we have this information, we go straight to the how do we disclose this? How do we present this in our financial statements? Starting with the statement of comprehensive income. Obviously, we are in the operating expenses section, right? And then our item is director's fees. And then let's see, what do we have? The pre-adjustment amount, 852,800 rands. Remember, we are dealing with what's this? Something that was paid in advance, an expense that was paid in advance, which was what's this? An expense paid in advance, which is a prepaid expense. So whatever that's been paid in advance, we need to subtract it. Who's this person? Come hello, Mflongo. Is it Mflongo? Please stop writing on my screen. You're disrupting my class. Your yellow colors are disrupting my class, ne? Please stop writing on my screen. Guys, if you don't know what you're doing, please don't just write stuff. You're disturbing me. So these 2 months that were paid in advance, we have to subtract them. So obviously we must subtract 104,000 rands. And then how much is that? How much is the, how much do we get from that? 748,000. I see two different answers. I see 748,800 and I see 748,000. Which one is the correct one here? Which one is the correct one? You guys are not giving me proper answers. Now I have to check my stuff. It's 748,800. Now guys, 748,800. Okay, so we have 748,800 rands. Okay, so this 104,000 rands, it goes to the statement of financial position. But before we take it there, remember, we classify this. This is an expense paid in advance. So, meaning its proper term is a prepaid expense, right? The proper term is prepaid expense. And then prepaid expense is actually a current asset. Prepaid expense is a current asset. And then meaning, what's this? We record it under receivables, right? So let's see how do we present this in our, statement of financial position. We have the following. Now we go to the current assets section, and then under trade and other receivables, that's where we have now we are adding the 104,000 rands, which is this amount here. As you guys can see, right? So any questions? Any questions? Now I'm opening the floor for questions. If you have a question, you can just open your mic and ask. Before we move on, we are done with this question. So before I move on to the next one, now I'm opening an opportunity for questions. Now you can just open your mic and ask or you can just type in the chat and ask. Né? Feel free to ask a question if you do have one. Okay. I see no one is really asking. So can we move on? Can you give me a thumbs up to indicate that I can move on? Give me a thumbs up. If no questions, just give me thumbs up so I can move on, guys. Okay. Thank you. Thank you. Thank you, guys. Thank you, guys. Okay, let's move on. Let's move on. Next question. We have the March 2023, May June 2023, paper one. We are dealing with Starlight Limited, and they say the information relates to the financial year ended 20th February 2023. The company trades in electrical items. So we start with our financial year, which we know begins on the 1st of March 2022, right? So we have April, May, June, July, August, September, October, November, December, January, February. So 28 February 2023. Okay. Still dealing with directors' fees. Let's look at the pre-adjustment amount for directors' fees, and it is 2,015,000 rands. Take note of that. And then here's our adjustment waiting for us. Directors' fees. So they say the company has two directors who were appointed in 2019. A third director was appointed on 1 October 2022. Okay, so the director was appointed here on the month of October. So since they said 1 October, we know that we also include the month of October. Né? So they say, furthermore, the directors all earn the same monthly fee. So guys, when you see this, the directors all earn the same monthly fee, you just have to be so happy and so grateful because your life has just been made so easy. You don't have to do, complicated calculations. This is the best thing you can ever hear when reading an adjustment because it just makes your life so easy, and you will see what I mean. And then lastly, they say directors' fees paid during the directors' fees paid during the financial year. Okay, directors' fees paid during the financial year have been recorded, but one director has already been paid for March and April 2023. So they didn't really what's this? They didn't really specify which director it is. Yeah? So, but they say one director has been paid for March and April 2023, right? So we already know that we are being tested for the matching principle. This is, an advance, something paid in advance, an expense paid in advance, which is a prepaid expense. So we need to calculate how much it is, and then we need to subtract it from our statement of comprehensive income. All right. So the first thing we are going to do, let's figure out how much or how many months was each director paid. Yeah? That's what we need to figure out. So remember, they said the company has two directors who were appointed in 2019. So we have two directors. Director one, director two. Can you just give me a minute, guys? I'll be back. Okay, sorry about that, guys. So we have two directors, no? These directors, what we know, they have worked for the whole year because they've been working, since 2019. And then we have the third director who just started working this year, the current financial year, from the 1st of October. So what we are going to do here, you don't have, remember they didn't specify, né? So you can just choose which one was paid in advance. So we can just say the new director, let's say the new director was paid in advance. Because remember, they didn't specify, they just said one director. So since the new director was the one paid 2 months in advance, how many months has the new director been paid? Can I see the answers in the chat? Can I see the answers in the chat? I see 7 months, I see 14 months. It's 7 months, no, guys. Remember, the new director only started working from the 1st of October. From the 1st of October. So 7 months, no? 7 months. New director has been paid for 7 months. And then, if that's the case, then we know the other two were paid 12 months each. The other two were paid 12 months each. And then from here, what we do, we just add the number of months in which they were paid. Né? So we have 12 plus 12 plus 7. That gives us how much? 31. Can you just confirm how much that gives us in the chat? How much does that give us? Yes, 31. Thank you. So it gives us 31 payments. Né? Gives us 31 payments all in all. So we've made 31 payments. So from here, our job is almost done. We go back to the pre-adjustment amount, which is 2,015,000 rands. So we have 2,015,000 rands, and then we divide it by 31. Since why are we doing that? Because all the directors are earning the same amount, so we can just simply divide. How much do we get? 65,000 rands. Thank you guys. Thank you guys. Thank you guys. 65,000 rands. So each director earns 65,000 rands per month, right? So our focus is on the 2 months in advance. So to get the 2 months in advance, remember the 65,000 is only for 1 month, né? For each director. So the 2 months in advance will say 65,000 multiplied by 2. And then how much is that? I think that's 120, no? How much is that? 130, 130, I mean, yeah, 130, 130. 130, thank you guys, 130,000 rands. So we know the 2 months paid in advance actually amount to 130,000 rands. So here's what we're going to do. We are just going to go to our statement of comprehensive income under the operating expenses section. And then we have director's fees. We start with the pre-adjustment amount. That's 2,015,000. We subtract, let me remove this, 2,015,000. We subtract the amount paid in advance, which is the 130,000. What's the answer here? What's the answer when we subtract 130,000 from 2,015,000? 1,885,000 rands. 1,885,000 rands. Thank you. 1,885,000 rands. And then we go to the statement of financial position. Obviously, this amount, this 130, also goes to the financial position. Né? It is an Expense paid in advance, so we know it's a prepaid expense, meaning it goes to what's this? Receivables. So we have the following: current assets, and then we have now trade and other receivables. We're just going to add the 130,000 rands in this scenario. And that's how the cookie crumbles. That's how you deal with it. Um, any questions? Yeah, now I can open now